So let's hit another stock before we take our first break, and that's courtesy of Josh. You highlighted Pfizer a month ago, maybe, said it was the most attractive stock to you in the market. You bought it. Now you doubled down.
I want to up the, what did I say? The most attractive stock? I said that?
Yeah.
All right. I want to up the rhetoric. I think this is one of the most mispriced securities in the S&P 500. Okay? I'm going to tell you why. We're now in a situation with Pfizer where there is nobody left who owns the stock that is like, in my view, that is like, ooh, should I really stick with it? Like, I think this has been so utterly and totally washed out. It's trading at an 11-year low, or just above an 11-year low. It's been one of the worst performers in the market, and everyone on earth is aware of the reason why. They made a huge bet on COVID between Paxlovid and the vaccines, and that bet proved to have been not something that was going to sustain growth past 2022. Okay, so that's out of the way. They are now reporting. If you listen to the last report, they're saying ex-COVID. So they're like almost like categorizing that as a legacy product line. Still hundreds of millions of dollars coming in. What's the future? The future is the Seagen acquisition, and I don't think there's enough enthusiasm for how many patents they acquired and how many FDA approvals they have or will continue to get. And that, for me, is, if you're a shareholder of Pfizer now, what you want to be focused on. Stock's up 10% over the last week. It's down 4% year to date. It's down 30% over the last 12 months. It is the 8th worst performer in the last 12 months out of the 64 holdings in the XLV. Meanwhile, you got a stock that's now above its 50-day, courtesy of a better than expected earnings report. And I say it's one of the most mispriced securities in the market right now because it is. It's a 10 forward PE on analyst expectations for earnings growth in 2024 of 45%, and then another 20% in 2025. I don't think the stock should sell where it sells. I don't think it will for much longer. So I added to my position with the stock higher after the earnings, and I'm growing increasingly confident that the 20s will soon be a memory.
How you like them apples, Belsky?
God, I'm breathing. I'm saying, like, Josh, breathe a little bit.
Well, I mean your Note Star producer says, quote, I think it's dead money.
I think it's dead money.
Has been. I agree.
Yeah, so, you know, you always want to buy.
No, has been versus.
I think it's dead money
longer.
I mean, you got to think about this, okay? So healthcare is now the second largest sector in the market. You got a bunch of great ideas that are growing with great cash flow, with great dividends, with great balance sheets, with great earnings, with great pipelines like Lilly and Gilead and Medtronic and Johnson & Johnson and Thermo Fisher. You got a lot of great ideas you can be in there. Don't need to own Pfizer in a value portfolio or tactical portfolio. Full disclosure, I own it still in one portfolio. Dividend growth. I mean, it's a total return story now. So, no, I'm not going to sell it. I've owned it for 10 years in that portfolio. But if I want to make money in a tactical portfolio, I'd rather be elsewhere.
How many companies can you think of that are expected to grow earnings double digits, have a 6% dividend yield, are blue chip stocks that have been around since the Civil War and sell at 10 times forward earnings?
Not many. However,
I think zero.
They've been talking the talk. Now they got to walk the walk. I think.
Agree.
So
That's the risk.
I'd rather be late. I'd rather be late and show me. It's a show me stock.
So what? One more earnings quarter where they're ahead of expectations. 3 more. Like what would be the thing that gets you onto my side?
I think they need this entire year, Josh, to kind of clean up COVID. Stop talking about ex-COVID because you're talking more defeated. Let's be a winner. Let's talk about how you're going to win. Let's not talk about how we're defeated.
I don't hate that.